Hi, this is Keith Schneider, CEO of MarketCage.com, and this is December 3rd, free edition of Market Outlook. So first thing I want to focus on is just taking a look at the weekly charts here and on the four key indices. And what we have is a significant improvement in the Dow. And look, the core trend here, as you can see in the Dow, extremely strong. Our real motion or momentum is at a very, very high level. And if you go back to 2015, where things started getting a little bit dicey, you had this sell-off in here. In terms of absolute momentum, we've actually now surpassed it with great confirmation, as we've been pointing out now for the last several months. So the Dow definitely improving. You can see you've got a crossover on the weekly charts of our 50-week over the 200, and the market just accelerated. But again, the key feature is our momentum is now well above the 2015 levels. Now that's quite a bit different than the S&P, right? Where you can see on an absolute basis the momentum, or by the measure of our real motion indicators, not even approaching the same 2015 levels. You have a similar scenario with the NASDAQ. And now what's interesting, of course, is NASDAQ paused, and you've got this rotation from massive growth stocks like the FANG that basically has led the NASDAQ up, moving to the Dow. And so that is your core feature. Now, the markets are running very, very rich, obviously with the exception of the NASDAQ. So in terms of actual trade setups, I'd look for maybe a bit of a correction or some short-term pullbacks to be a buyer. But that is your core feature. Okay, so just taking a look at the daily charts, again, similar scenario. You can see here that the Dow on the dailies extremely strong as well. You did have this sort of intraday sell-off, and that turned out to be a pretty good buying opportunity. Now, that was pretty tricky to buy. You had to buy on really some absolute weakness. And with the dicey nature with the Flynn investigation, you're going to see some increased volatility as well. But again, the core feature here, the Dow, really the outperformer. IWM looks like it's coming in a pretty strong second, and the rotation out of the FANG stocks and out of the big growth stocks is pretty visible here. As you can see on the daily charts, we actually closed under the 10-day moving average, and that now means that the leadership in those stocks definitely under question, and it's going to take some time to digest this rotation, but it's more likely that the Dow and some of the more infrastructure plays are going to continue to lead, and we'll get into more of that in a moment. In terms of our risk-on, risk-off indicators and our gauge here of risk-on, risk-off, you can see we actually had this situation where intra-week, because of the questionable vote on taxes, which was, of course, finally approved, that the gauges intra-week actually moved back down. But now we're back into more of a positive range. And, of course, the key feature that you can see is the conservative play into utilities relative to the S&P favors risk on, right? So again, stocks relative to the safety of utilities definitely favors stocks. In terms of the key ratios, one thing you do have in terms of some persistent deterioration is the issue of high yield debt versus the safety of bonds. Normally, we like to see the more speculative high yield stuff outperform. That's continually under pressure. But on balance, SPY versus bonds versus gold, and those two key intermarket relationships, very positive. One thing that is sort of in a neutral to positive zone is lumber, or looking at wood versus gold. And you can see that's basically sitting right at its fast or monthly moving average, but still nicely above its 6 months. So in the overall picture of risk on, risk off, definitely favoring risk on, and the overall trend, of course, is strongly positive, especially in the Dow. Now, let's take a look at what's happening with sectors. The big thing in sectors is you've got an increased participation across the board. So with this particular chart here, right, this is the number of sectors or groups that are up, and you can see we only have one that's actually down over the last 6 months. So that's telling you that the trends are strongly intact, right? As you can see, the number of sectors that are down over a 6-month period moved from 5 or 6, or at least over 5 during this sort of sideways action here, now has improved significantly, and we're at some of the highest levels that we could be at on an absolute basis. So again, good improvement in sectors. Now, the other thing to note is that consumer staples, which again is a conservative play, is the only sector that's down over the last 6 months. So overall, huge improvement in sector participation, positive movement across the board, and then again, the key thing to note is in terms of the sectors is that financials moved up extremely sharply with the tax initiative that was approved by Senate. It still needs to be approved by the House. And you can see that was up 5%. Home builders, right, up 3%. And the changing of the guard here, where the leading growth stocks and semiconductors, that was down 6% for the week, still leading, right, year to date, that where it's up 38, almost 39% year to date. So it's still the leading sector, even though it corrected. So you've got a situation where financials up 5%, transportation, infrastructure play back up 6%. So there's definitely a shift in sector participation. I expect this to continue and persist for at least the next couple of months. The other thing to note, and we had pointed out, is that retail, right, which had been really beat up, was up almost 5% for the week, and that put it into a positive note over the last 2 weeks. So it's now, for the last 6 months, a net positive number. And the other thing that also confirms the overall positive condition of the market is that consumer staples, right, actually is on an absolute basis over the last 6 months, still down during that period. So this is a conservative play, and as you can see, it is the weakest performing sector out there. That's a positive sign in terms of analyzing sectors, right? This is a very, very conservative play. You got a similar situation in utilities. You can see it's only up 5% for the year as compared to financial, home builders, semiconductors, and of course the transportation, which is now up 11% for the last 6 months. And again, the 6-month rate of change, or the 6-month absolute performance, is an important number, because that often is a good indicator of persistent trends. It's a good, solid measurement, and it's the basis of a lot of our relative strength methodology. Okay, so now finally, let's take a look at volume. And one thing you can see is that the volume has been confirmed in the new leadership in the Dow, right? So we have here 4 accumulation days versus 3 distribution. This is the strongest index or the strongest benchmark of equities here, the Dow, and that is the strongest. So net in terms of volume, you're getting new leadership in the Dow and sort of what I would call more of a neutral reading, with the exception of NASDAQ, which has definitely been under some distribution. So you can see changing of the guard, moving from NASDAQ, which was the strongest, now to large cap multinational type stocks. All right, finally, let's take a look at market hotspots, which is just looking at things on a global basis in terms of commodities and other things as well, like emerging markets. And so a couple of other things to note. Number one is that the leadership in emerging markets definitely took a hit. So as you can see, over the last 6 months, emerging markets still very strong. It was up over 10%, pretty good. But just in the last week, we were down almost 4%. So emerging markets were leading over established. That has shifted. And again, you can see semiconductors, which have been on fire, right, over the last 6 months, up 15%. Solar, a byproduct or a subgroup of the semis, up still over 30%, but they hit sort of an air pocket here as people rotated out of the really high price growth stocks that dominated the semiconductor and the solar sectors here, and back into more of the infrastructure plays. And again, I expect that to continue and persist. So net, you can see sort of a shifting of the focus of leadership. We expect that to continue. Overall, trends look like they're strongly intact. Can't really argue with that. However, with the situation with Flynn, we don't know where that could lead to. And so that's your sort of wild card that you have to pay attention to, because that could certainly unnerve the market. The other thing is that with that in the background, I think you're going to see more of an upward bias with increased volatility. So that will be a shift as well. All right, that's it for now. We're going to move on to the premium section for market outlook. And good luck with your trading, and have a great rest of your weekend.